this is something important for people to know. The funds that you're using for the purchase of a house, it's a complete audit trail. You have to do it. It's not negotiable. You got to trail your monies.
Welcome to the latest episode of We Fixed Real Estate. René, Pérez, freshly back from a gold prospecting journey to Alaska. René,
for anyone that's looking for extra gold, I guess you can't really tell. Maybe it wasn't the best idea. Let me see if I can unblur the.
Oh, I can see it.
So let me see.
Oh, I can see it.
It's hidden in the black sand. So usually when you pan for gold, you get a lot of the heavies.
Mm-hmm.
So you collect, if you see black sand, that means that there's probably gold. So I have little different bottles from different days.
That's cool.
So it's pretty small, but the idea is, if I spent there, 2 weeks every year, 5-10 years, you collect a good amount of gold, just like appreciation in real estate, right? If you sell the house same year, you're probably not going to make a profit. But if you keep it for 5-10 years, you'll come out with a pretty good chunk of cash.
For those of you that don't want to mine Bitcoin.
Yeah.
You've got a couple more vials to go before your Parker Schnabel.
That's for sure. Yeah. And it's a really good hobby. Every person that I've met that's like panning for gold, they're super nice. They're just there to relax.
Mm-hmm.
They share their stories. Some people say that it's for exercise because you're, moving the pan back and forth. So I do think my arms got bigger. So
yeah, you're looking buff. Yeah. I was watching it was a YouTube thing. Have you ever done it where you snorkel through the river and just kind of
out? So that's probably the next trip, maybe in a couple of years. So if you go up to Nome, Alaska,
mm-hmm.
or up in the I forget which ocean it is. But yeah, that's still, there's still a lot of gold mining operations up there, gold prospecting. And that's where you're going to find the big nuggets. People make $50,000 in a day still. So
pay for the whole trip.
Yeah. But that's dangerous. I'm sure that there's animals that can just rip you apart. Right. And it's really cold too.
Yeah. The video I saw, I think it was in New Zealand or somewhere in South America.
They also have it in Australia.
Oh,
okay. In Tasmania. So there's a lot of operations out there.
Well, that's going to be interesting.
Yeah.
Now, Fred, you opened the subject, Bitcoin. I saw last week that they're recommending that crypto assets can now be used for to obtain.
Yeah, you know what? They've been using them, but you just had to convert it to cash. So now they're saying, okay, we'll just take the value of the Bitcoin today. That's your asset that we're going to allow you to use for your mortgage. You're eventually going to have to convert it to cash to get it to the escrow company anyway, because I don't know of a single real estate escrow situation where the escrow company, the title company, will accept Bitcoin. They only work
pay for it. I think
cash.
It's for proof of funds.
Yeah, so it's just you're going to have to move it anyway, but now you don't have to move it right away. That's really all it is. It's, the headline sounded great. Oh, I can use my Bitcoin. Well, you can always have used your Bitcoin. You just got to change it to cash.
Oh, thanks for clarifying. I thought it was like you've got $5 million in Bitcoin. You don't want to sell it. They can't prove that it's an asset. $50,000 down payment, and you want to use that $5 million in Bitcoin just to prove that you have enough money to pay the mortgage, but you don't want to sell.
Right. It just used to be you had to convert it to cash for the underwriter to accept it. Now it's just, okay, you give us your Robinhood statement or something, and there it is.
Use it or not. So it's not a tax.
But eventually you have to convert it
if
to
you
cash,
want to spend it.
And you're going to have to prove the conversion to cash and the sending the money to escrow, because let's get into this, because this is something important for people to know. The funds that you're using for the purchase of a house it's a complete audit trail. If you don't know what an audit trail is, you basically have to say, okay, here's where my money is. And now I show it going either to the escrow company via a wire, or I got a gift, and the gift went to one account, but then you got to prove that it really was a gift. There's a whole process. Don't get pissed off at the lender. You have to do it. It's not negotiable. You got to trail your money. So the thing is, if you just got yourself a bag of cash, a couple $100,000, you think you can go buy a house, you deposit the money in the bank, and the lender says, "Where'd you get the money from?" And you say, "I found it." Dude. No, they won't allow that money to be used for you to get a mortgage. And this is on the standard, fully documented owner-occupied things. There are no doc like loans for investors where you can, they don't care because they're going to charge you out the wazoo in rates. But yeah, it's really important. We had a buyer who got, I don't know, about 4 or 5 different gifts from different family members, and some were in foreign countries, and bank statements in foreign countries. And it was just a whole mess. It took time to clear it all out. It has to be, the gift letter has to be for the exact amount as the gift. So if you're sending $50,000, but they charge you $50 for the wire and you net less than the $50,000 by the $50, you have to get a gift letter for the net of what you received, not the $50,000. It's crazy, but everything has to match. It is an audit trail that must be done. Even if you're putting 50% down, it doesn't matter. They have to know where the money's come from, because there was all kinds of shady deals going on, how they fake people with the money, how they would jack up the price, and you buy a house that looked like for 100, but you're really buying it for 40 because they raised the price and the seller's taking a second or some other crazy thing. Those days are gone. So it's a full audit trail. So be careful and think about it. So, but let's go back to this situation where you have 4 different gifts coming in. Here's the easy solution. Have the 3 of the gift givers give all the money to the person who's closest to you. In other words, parents are usually the best. So have your aunts send the money to your parents, have it all come out of one account, one gift letter, one proof of funds, one proof of the wire to the escrow company, or however they got it, or to your bank statement. Just makes life easier. That's another little thing to watch out for with funds. As we keep going with that, it's basically, they're going to look at your bank statements for 2 months. And if they see a deposit that's large, that's other than your regular pay stub, they're going to ask, where'd the money come from? If you transferred it, say you sold some mutual funds, you transferred it from that account to your checking, got to document it. Give the lender every bit of documentation, 2 months, so they can easily see, oh, we see a credit coming, a debit coming out of the mutual fund, a credit coming into your checking account. Obviously, that was that. So be careful. 2 full months of physical statements. That's what you got to do. So if you're trying anything else, put it in the bank, wait 2 full months, because then, they don't go back more than 2 months. So there you go.
That's a helpful tip.
Think about it.
Back to Bitcoin. Last week's big announcement was really just no news. It was just
it sounded like it, but you've always been able to use it. You've had to convert it to cash sooner. So no biggie.
We won't dwell on it. What about using Bitcoin to get a loan on your Bitcoin to buy the house, so you never have to sell the Bitcoin?
Lending rules are that any loan that you take, number one, they have to count what the monthly payment's going to be on the loan, but it must be secured by something. And to be honest, I don't think they're going to let you secure it with a token like that. Usually it's secured against a house, another piece of real estate, or even a car loan. But the Bitcoin is fluid. So I don't know the answer, but I'm going to err on the side of caution and say no. I don't think any guidelines come out about that, but we'll look into that. Next week, we will answer that question.
Yeah. I'm just wondering, how do you know? Like, if you've got 10 million in Bitcoin and you want to take out a $1 million loan on it, and just pay 1 million for cash. What was the mortgages don't have anything?
No,
to
if
do with
you're gonna
right.
get pay cash, it doesn't matter. If you're getting a loan, that's when
Huh.
it matters.
I mean, it's similar like if you have stocks, right? If you have stocks, they only count 80% of your value of stocks, right?
Or sometimes 50%. It depends on the lender. Yeah, we borrow against the stock. So I'm sure if I had to guess, it's probably something like that where they'll say, okay, 50% is probably the number that you can secure it against.
So before we dive into what we're actually talking about, since we're still speculating, René, you were telling me you can buy a mine or a mining rights claim up in.
Yeah.
How's the track? Is that like real estate in Alaska?
Yeah. So I haven't looked too much deep into it. But the way it works is you can buy a claim, right? And you can't build, right? It can only be done for recreational use and for mining rights. So that means that you can actually dig holes. It depends on the state. Like in California, you can't dredge, right? And dredging is when you go deep inside and just start vacuuming, right? And I mean that creates a lot of environmental losses, right? That's where, back in the olden days, there was a lot of mercury, right? So it pulls up all the dirtiness of that. So you don't want to bring mercury up. But in Alaska, you can dredge. In Alaska, you can have a lot more sluicing. So you can also, usually when you go to these places, you can only use your hand shovel. You can't have a huge, mechanic, bulldozer to go through rocks because, again, environmental concerns. But in a place like Alaska, there's less restrictions. So you can have a sluice, which kind of functions like it's a little machine that you can just drip water into it, right? And if the river flows, it's going to go through all the dirt, and it allows for you to go through more dirt to look at the gold. And gold's really sneaky, right? It's heavy. It hides underneath all the dirt. So obviously, if you have a big nugget, you'll be able to see that more clearly. But if it's heavier, you wash it out with the sluice. And yeah, I mean, in Alaska, I was looking at, there's places, 1 acre for like 25 grand, right? So it's kind of nice, but also you don't know what you can actually find there. So
Yeah.
It'd be good. There was a guy, so we actually went to a place called Resurrection Creek, right? And there wasn't any we did a couple test pans, and we couldn't find anything. We didn't find any black sand, which if you find black sand, it's indicative of gold. And we just kept driving. And at the end of the creek, there was actually a house. It looked like a residential area and like Airbnb modules, or what it seemed like to be. And we're like, okay, well, this is a house. We probably should get out of here. In Alaska, it's easier to get guns, so you don't want to be in a place where you don't want to be a claim jumper, which is actually a problem in Alaska, or anywhere that claims exist. But so we talked to this guy, and the guy is like, well, yeah, you're not going to actually find gold out there, but today's your lucky day, because I actually have a gold panning school, and I do have an area in my property that does still have gold. So he charges to use a claim $50 per person, which it's, if we're gonna find gold, it's nice.
If you find a $30,000 nugget, it's worth it.
Yeah. So he says,
nugget.
yeah, he says depends on how much of a gambler you are. And sometimes the house loses, but it's coin toss. So, but yeah, I mean, he has 18 acres. He has his residence there, and then he does have like 10 ADUs in his property. So he's like, yeah, I don't actually market that I have a gold penning school. It just depends. Like family and friends reach out, and I have the kids, dig through the dirt and find a little bit of gold, and then I put it in vials for them. They have a little lake, and he actually said that his property had been on the market for almost 3 years, so he's trying to get rid of it.
I was going to ask you about real estate in Alaska as we try to segue back to the topic of this show.
Yeah. So that's actually something that I started doing this morning. I couldn't find his property on Zillow. And I don't have his exact address, but I have his phone number. So I'm going to reach out to him and say like, hey, like, what are people doing to market these homes? And why can't I find it on Zillow? And it's like, hey, you know what? You probably need better representation. I mean, that's a difficulty of unique homes. you're probably not going to have a buyer from a nearby location. You're probably having, I mean, it's like if I'm trying to buy this from Alaska and I'm in California, I mean, where the money exists, how do I find that location, right? And it does boil down to people who are on the ground, who are looking at properties, word of mouth. So, it's for the regular homes, vanilla, Cupertino, 4-bed, 3 baths, Zillow is the key. But if you're looking for unique properties, that is where you need a little bit of more hand-holding.
Yeah, like maybe some TikTok kind of exploded thing with some influencer-ish.
Yeah.
Kind of offbeat stuff.
Yeah. So Fred and I mean, we're kind of, we've had the good luck of, we work in markets where there's just everything is easier to come by, right? It's Seattle, San Francisco, San Jose. These markets, they're easy to find. But it'd be interested to kind of get more into the pursuit of the difficult and more unique properties, more actual work that gets involved, then how can we help them, right? Because we bring a model in which we could help consumers more. So,
yeah, now we just have to see what's the reciprocity between the states we're licensed in and Alaska.
Yeah,
maybe Washington.
It's state to state, but a little known fact, it's once you're actually licensed in one state, there are co-op opportunities. You can't necessarily practice real estate in that state, but the agent that has a listing on the other state can help you in navigating the contracts and just have a separate agreement with you, a cooperation agreement. So it is trickier and it is best to get licensed in that state. But let's say that you're looking, for anyone that's viewing this, let's say that we helped you in San Jose to buy a property and then you are looking to purchase in South Dakota, right? You can reach out to us and we can reach out to the listing agent and see like, hey, can you work together on this deal? Because it's going to be easier if you work directly with us, right? Versus going to a new person that doesn't know what they're doing in terms of real estate. But then that listing agent can help write the contract, right? Because they're licensed in that state. And we just help with the negotiation, right? Because we are licensed. So there's a lot of nuances in that, but we are able to technically help you in all the United States.
Yeah, there seems to be no reciprocity with Alaska, but you just take their courses and test and show that you've been in the business for 6 months. And so it's not that hard.
Not that
I
hard.
really want to do it. So
As you're doing your research, do they allow rebates? I'm like,
it doesn't say. We know Oregon doesn't, but
they don't even allow you to pump your own gas.
it's interesting up there. I mean, we're going to get there soon and we're going to make a play because we have a flat fee that's a lot less than everybody's 2.5%. So everybody should go with us in Oregon. But let me say this because something I found out today, there was an agent on TikTok basically saying Portland's condo market is deader than dead.
Oh,
deader than dead.
Like Walking Dead?
Like beyond that. Sleeping dead. Which brings me to, I was going to talk about condominiums in general and what's going on if you listen to this podcast regularly, which you should. The condos have had their issues, especially with balconies and structures and condo fees and insurance. Condo fees have just skyrocketed. I don't know if there's a number, but I'm sure minimum every condo has increased by 1/3 in the monthly payment. So when the condo fee goes up, the value comes down. So now people are saying, well, if it was a $500,000 condo with a $500 fee, now you got a $750 fee. That condo is maybe now worth $400, but people are looking at it like, I'm not touching the condo. Look at the condo fee going up. Well, it's not going to continue to keep going up 1/3 every year. Yes, insurance is going to be a problem. Maybe there's the Fannie Mae Freddie Mac is allowing condominium associations to borrow the money to be able to do any of the repairs that are necessary based on the reserve requirement form that they get, and in California with the balconies. So it's not going to be as bad. So they're trying to help. Eventually, this is going to take probably, if everything stays the same, 2 or 3 years to stabilize. And then condominiums are going to get back to vogue at a lower price. And then we're going to go through it. It'll go up a little bit, but you don't buy a condo for appreciation. I mean, you just don't. It just doesn't happen. They're there as places to live as opposed to investments compared to a single family in a great school district. So that's something to keep an eye on. And there's two kinds of, I want to remind everyone, a condominium is a type of ownership. When you think of a condo, it just doesn't mean an apartment, because actually a condominium could be a townhouse. A condominium could be actually a single family house. So if you want to know about this, Google it or ping us and we'll go into detail. But the bottom line is they're talking about the flats, the apartments.
Mm-hmm.
Those are the ones that are having the problems. And then a little higher up the scale are townhouses. So yeah, we have a couple of townhouses in San Jose now for sale. You know, and the seller on one of them, well, I want to get what I paid for it. Well, it's not a matter of that. It's a matter of what someone's willing to pay. And that's part of the problem. So you probably still have a lot of sellers who are out there. Well, you know, this is what I paid, so I don't want to lose. But you're selling now, and this is what the market is. It's just like a stock. What you paid for it doesn't matter because it's priced based on today. So, you know, are we going to see defaults on them? Yes. Florida's just going to keep getting worse. I mean, it's unfortunately just a nightmare down there. But the condominium association, really, one of the things you want to do is make sure you have the right property manager. 50% of the condos we deal with, the property managers are worthless. I mean, there's one now, as a matter of fact, one of our listings where something was supposed to get done by law by the end of last year, and they finally are getting it done now, and it's the end of June. They took their time. They didn't care, but, you know, people weren't able to get financing. It's like, and that's been dropping the value of the units because of it. So be really careful with condos.
How do you find out if when you're going to pursue, you're going to look at condos in this particular part of town?
Excellent question. Depends on the quality of the listing agent. For example, we upfront get every single bit of documentation we can, and we give it to everybody up front. Take those minutes of the meetings from the last 2 years and see what's going on. We had one the other day in San Francisco where they got all the stuff. We gave it to our buyer. We hadn't had a chance to review it, but he reviewed it and said, well, wait a second. They're talking about spending $370,000. And have they spent it? Is it part of the budget? What's going on? And, you know, I posed this question to the listing agent who, you know, was supposedly going to go get the answer from the property manager. But yeah, ask.
You know what? It's not a listing agent. The listing agent's role is not to know everything about the HOA. Some sellers don't even know what their property has because they don't go to the meetings. If you're looking into condos and you're looking into places with HOAs, the only real way to get the real information is for you to look at the developments that you're looking at way ahead of time, not before the market houses in the market, but looking into seeing if you can attend the board meetings. Some board meetings are open to the public, some are not. That is the only way for you to get the answers, because you get the board meeting minutes. Well, guess who controls the minutes? The people in charge, and they're not going to have yes, sure, you should write the big line items, but there's nuances. Oh, there was one party who was angry at this and they left the meeting or they yelled at them. They're not going to include all those little things, right?
For sure.
So if you really want to know how bad things are with an HOA, attend the meetings, because that really is the only way. And it sucks because if you're looking to buy a house quickly and you're rushed to it, or you see something that's really pretty and you're going to jump on it, you do face the risk of like getting into an HOA that is bad. But of course, if it's a really nice property, odds are that, you know, it probably isn't a bad HOA. So You can't.
And call your lender and say, look, I'm looking at this condo. Can you find out about it? Are you going to be able to approve it? And then that loan officer can try to get a hold of the property manager and have them answer the questions. These property managers are obnoxious. Oh, you have to pay us a $500 fee for us to fill out the form, and it'll be 2 weeks. It's disgusting. And if you're on a condominium board or you're in a condominium, you want to make sure that the property manager responds immediately or very quickly to any lender questions. Anyone is going to be buying, they need to know this information. If not, you make a contingency in the contract subject to lender approval of the condominium association. And so you can get out of the deal because you could waive the mortgage contingency and then you get screwed because your lender won't approve the condo. So it's really important that you check out all this stuff out. Your buyer broker should be helping you, kind of get everybody to do it.
Let's just say it's a hot housing market. The condos, there's 2 or 3 condos in the same area overlooking the beach. It's a place that everyone wants to live. Is there certain like red flags that just stick out? Like this facility has way more condos for sale than this other facility? Like, is there something you can just kind of tell by analyzing it?
Here's what I always tell people. Do not buy the condo with the lowest condo fees, because problem number one is I'm sure they have nothing in reserves, which means if something happens, you're going to have to pony up the money. So yeah, look into the details of reserves, just if it all makes sense, income and expense wise. Have they done the reserve study in the last 3 years? If it's a over 4-unit condominium, you want to see that. How are they going to fund the reserve issues if they haven't? So it's more nuanced. It's like, all these people screaming on Reddit, oh, you don't need a real estate agent, you can do it yourself. No. This is one of the reasons why you have an agent, because you can't do this yourself because you don't know about it. You don't know what to look for. Yeah, if you're an expert in this, great, but the average person wouldn't know. So get the lender involved, get your buyer broker involved. The listing agent should have some info, see if you can contact the association. But yeah, cover yourself. But the fact is, nobody's buying condos now anyway, so it's all frivolous information.
Yeah. I would also think you'd also want to analyze how many vacation rentals are in that building.
Yeah, how many investors,
how many people are actually occupying it versus speculating.
Yep.
And that is information that should be a part of the CCNRs, which is part of the HOA documents. Some developments have limits on how many units can be rented, right? And if there aren't any limits on rentals, that could also be a potential red flag, because that means that you don't know who's going to be next door to you, right? And taking up parking spaces, and people, when they're visiting, they often don't respect that, right? So
here's another question. You got to check to make sure that pets are allowed if you have a pet. You could look at this great condo and you really don't think about it, and you go through the whole vacillation of putting offers in all 9 yards. Then they find out, oh, there's no dogs allowed.
Or they'll say small dogs, and it's like,
define that.
Define a small dog. My dog's a pretty small lab, but it probably wouldn't be allowed there.
Yeah. So, it's things like that. You got to look at all of those things. Another thing that you want to look for early in the process, kind of transitioning to this, is homeowners insurance. Please, we beg of you, talk to a homeowners insurance company. They, in California, I know for a fact, they can actually, once you have a actual address you're interested in, most of these firms can plug in the address and tell you if they can insure it or not, or if it's going to go on fair plan. But the other thing is they'll also know through their system if there's been claims. And we've had people have trouble finding what, because 3 years ago there was a claim for I think it was a plumbing issue. So they try to get out of doing the insurance on minutia sometimes. Sellers should actually disclose if they've had insurance claims in the last X number of years, but sometimes they don't, or there's a lot of agents that just don't give you disclosures or anything before you put an offer on a house. You just don't know, afterwards. So that's really important. And the condo too, is the condo properly insured?
That's
Do your homework and make sure you get a fully underwritten pre-approval. Today we had an issue. We had a guy who thought he was perfect and fine. He wasn't. And now he's not able to probably make an offer on a house. But you don't know what the lenders are going to look for. So you really, really, really need to get a fully underwritten approval. It just makes sense.
Let's switch topics. The last week we were talking about that house in Arcadia. How's it going?
Well, we got the engineer out to tell us about putting up
that's what
wall. We haven't gotten it in writing, but what he did say is that the wall is going to go kind of on the side of the backyard as opposed to in the back of the backyard where it faces the road, because the noise is coming from a different direction. We thought that was interesting. He's sourcing materials, but he's figuring it's going to be something around $100,000. So we're actually having an offer date tomorrow. Had nice attendance at an open house yesterday, and we've just told everybody this. The seller's not going to do the work. We're just giving you an idea of, hey, this is how to make it a little quiet. But yeah, everybody's a little different. There's one woman came in, loved everything, but just couldn't take the noise. Another couple came in, he didn't care. They didn't care. So they were cool with it.
I can speak. I have firsthand knowledge on sound walls, how they can be deceptive. One of my good friends lives in Carpinteria, a block away from that I-5.
From the one,
Or the 101.
or the 101, right?
And they never had a sound wall. You could actually see the cars from his front yard.
Yeah.
And they put in this big 10-foot sound wall, and it actually got louder in his backyard. He's thinking it just bounces off the wall and lands straight down into his backyard.
Crazy. I told people, look, if you ever saw an outdoor concert like Coachella, those big speakers, buy a couple of them, put a loop tape of Helter Skelter and just blast it towards the 210. You won't hear anything. So drown it out with something louder.
What about like noise canceling headphones? Could you get like noise canceling speakers beaming into your house?
The inside of the house is not a problem.
Or the outside and out by the pool.
It's the outside by the pool.
That's something that needs to be invented.
There you go. All right, nerds, get on it. Break down the sound.
So René, you're back. What's the latest now that you're back? How's the Bay Area as far as housing?
When there's a holiday, I think it is a more normalized market these days. Like people do things as they expect, right? Where like Father's Day weekend, hey, we're not going to be looking at houses. We should spend time with family. 4th of July, same idea. People are on vacation, especially for the, I guess, just in general, summer's a good time to take 1 month vacations to Europe, 1 month vacation to Southeast Asia, and the list goes on, right? So there's people who are just not looking, right? And they have time before the fall and before they have to get their kids in schools, right? So, I mean, we still are people who are looking, right? People who have not been looking for a long time jumping in, but that's normal. I mean, we're in one of the few markets where that happens, right? There's a lot of markets like Austin, for example, Austin, Texas. It's being hit deeply with just a lot of new construction out and empty rentals. Speculative markets where people are just not wanting to rent them for that price. And I mean, I actually just, and even in San Francisco, there is a extreme AI move to San Francisco. People who were in New York looking to move to San Francisco. I'm actually going to meet up with a friend who he was in New York. He's trying to build a real estate startup, and he's like, hey, can we chat on Thursday? I'm moving from New York, right? So there is that shift. Usually it's the SF to New York to SF shift. You're seeing a lot of that shift to the Bay. But you're also seeing, and even in the rental space. So I'm moving out of my apartment actually, and I rented this place in March. And I remember I quote unquote lowballed my landlord for the rent. And, they were like, yeah, you know what? Sure. I'll rent it for you, because they were not getting anyone, right? And the rent was in the market for like a good 45 days, outdated. I actually came in and I painted the walls, and I fixed it myself, just because like there was black walls and there was like dark orange walls, and
Wow.
and this is actually, if you're looking at rentals, it was crazy. It's insane that the landlord had hired a leasing person to lease their apartment, and the leasing agent had only marketed the property in Zillow. Now, sure, fine. For the most part, Zillow is the most used website for rentals, but the fact that they did not have any professional photography, they did not have a 3D Matterport, they did not have drone shots, and that they didn't tell the landlord, like, hey, let's just spend $200 to paint the walls. It's ridiculous. And that's why they weren't getting the rent that they wanted. And that's why it was probably in the market for longer. Now, I put the rental on the market myself, and it was insane. I mean, I did a 3D Matterport on the unit. I put it everywhere on the MLS, and we had over 40 applications.
Whoa.
Right, over 40 applications, and yeah, people. There were waves of people begging and asking to rent the apartment, and now and with a higher price as well.
Mm-hmm.
It's just an insane. For rentals, it's crazy. So it's people who are kind of staying out of the market. All the people that you look at the incomes and salaries of the people that are renting these units, they can purchase a house, right? But you have a lot of people who are just staying on the sidelines. And that's the other thing. So it's a crazy market. It's still unaffordable. I used to always tell Fred that like I see a crash coming and such, but I don't think there's a crash coming,
Might be in the middle of the country. I saw
yeah.
heard on Reddit. They have this cool guide subreddit, and it was a map of the United States, all the counties in the United States.
Yeah.
It had housing inventory, whether it's tight or open, and the whole California seaboard was dark red, like the tightest you could go. And then the whole swath, other than like a little pocket here and there, was all green. And even what I was surprised is on the East Coast seaboard, that was mostly green to like light yellow, which is not too impacted.
Yeah. There's just too much money in the Bay, right? Like we've seen it where like one of the partners, it's a couple, and one of the partners gets laid off, and it's just like, oh, okay, well, doesn't really matter because we don't even need the other persons for the pre-approval. There's enough cash and down payment funds for only one person to be on the mortgage, right? And like, oh, don't worry, like my parents are going to give me funds to buy the property, right? So there's just, the price can't go down because there's just too much money, right? The stock market would have to go like 50, 80% lower, right? We talk about like, oh, what if the stock market goes down 20%? Well, sure, fine. But 20% lower is still like insanely high to what it was 10 years ago.
Mm-hmm.
A 20% drop is nothing. 20% drop in the existing current market is nothing as well.
Mm-hmm.
It's already in the millions. So it's sad.
We're a different market than everybody else there. Yeah, you see on Reddit, oh, who are all these people buying in California? Well, we can introduce you to them. But the fact is, Meta, Apple, NVIDIA, et cetera, they're paying really smart people a heck of a lot of money, and they end up producing a heck of a lot of money because, it's basically run by the tech companies now, and that's where the money is.
Mm-hmm.
It's just like the gold back in 1849, with all those people making their money in gold. The new gold is tech. That's all it really is. So
if you're looking for real gold, then the real gold's still gold.
Exactly. And mining has become Bitcoin as to gold. So
we've come full circle. So
they're exactly what I was trying to do.
Real estate.
I
think either Texas or Florida is accepting like gold as legal tender or something like that. I saw an article about that. So it'd be interesting. You walk into Walmart and be like, hey, here's my chunk of gold. That's what I'm paying today.
I think you'll see that in Alaska first.
Yeah.
Yeah, pretty much. hang in there, kids, and study hard with tech and make some money. But I mean, the great thing is, even Google has said they don't care if you have a college degree. If you know something that they need your expertise in and you're good at it, so you can now focus on one thing and not think about anything else.
Mm-hmm.
So it's a different way to get hired for lots of money without having to go through the aggravation of $100,000 in student loans.
Mm-hmm.
So, and there's plenty of free courses out there, and there's plenty of people, if you know what you're doing, to get into a small startup or something, or volunteer. If you have the aptitude for it, go for it, kids.
Sounds good. See you next week, everyone.